Good afternoon, all. Ira Epstein of Linn Associates, and I decided to wait till after 5 p.m. today, today is Thursday, the 23rd of January, 2020, and we're at 5:05 p.m. Central Time. But I wanted to get the reopening of the markets. I thought that was important if we're going to do the financial video. As you can see, the gold gave up some of the gains that it made. Silver never did gain. I mean, it's just getting smashed against the gold market. Copper up a little bit, and platinum. Why? Well, WHO, the World Health Organization, did not give the world a clear signal. It declared an emergency within China, of course. It said that they're having that. But so far, outside of it, they're not finding person-to-person transmission, and the people that they're finding in some manner came out of Wuhan. And that is, I think, very, very important. Japan tonight, a second case discovered, but again, that person was in that city, flew over, they caught it, and the person's now hospitalized. So the markets have a way of digesting all this. Certainly a huge rally in the NASDAQ, and you can't get away from how powerful this market is. It just refuses to stay down. The other stock indices are doing well. In safe havens, you slip from the highs of the day in the Japanese yen, the bonds, and the notes, and we're getting a little bit, a teeny-weeny bounce in the energies. Maybe we saw today a capitulation type of throwing in the towel, and we're going to go sideways for a little bit. I don't know that people are going to get super aggressive outside of stock indices, which don't seem to stop the rally. But in other markets, they might be cautious as they want to get more information as to what's going on. When we look at a weekly chart of closes for the week, we're up 4 ticks. So it's not like the market's run away, but again, it's a new all-time high. I don't know where the week's going to finish out, obviously. When we take a look at a daily bar chart, you're getting distribution. That's not necessarily a bearish sign. This is a market that's suddenly going sideways up here. You can see how the market stepped out of its uptrend with the higher high and the lower low it made with the break today, and now the market's just sort of sitting right in there. In terms of moving averages, you're over the 18 in red, which is over the 100, which is over the 200. Still a very bullish setup. Market is focusing quickly. It moves. It's amazing from the coronavirus to earnings. I mean, it's just like that. You've got to keep your eyes on these things. Where did it go the other day? To the upper band. It broke back. That's okay, because you've got to keep your eye on the slow stochastic. It is still embedded. And as hard as it is, I think traders are buying the markets on breaks, trying to pump out as they're rallying back in them. It's certainly a scary situation with this virus, but as for the market itself, I don't see anything that the economics away from the virus, and there's plenty of economics with the virus, are hurting the U.S. stock market. In terms of the NASDAQ, today was one of those days you fell and right back up, and again, you kept the embedded reading. In the Dow, if we look at where the market finished, and let's first go here, you kept the embedded reading on the close of business today. Now, on the reopening, you're still keeping it. So this market, I'll be moving this arrow up here. And right now, I'm still seeing support against the 18-day average. The market has, for the moment at least, shook off this virus scare. And even the Russell is doing the job of keeping the higher lows, higher highs. And all it's done is fallen back to the 18-day average within an uptrend, correcting, current tense, not past, correcting an overbought condition where it's still overbought. It's still not the best looking of the charts. In the VIX, what you did during the day is you rallied up on the fear to the 100-day average. Remember, I'm always looking where that 100 is in Bollinger Bands, and that was the resistance point, or one of them, and then fell right back, challenging right at the end of the day the 18-day average of closes, and managed to settle under it at 1298. That number's 1306. Wow, craziness. T-bonds. I think the smart money's coming out up here. You're going to say, what? This is a virus. It's a world pandemic, possibly, and I'm not disagreeing. But as a chartist, throw your name off the chart, and you're into this resistance of the 100-day average. If we come back, and this is what we looked like coming in. This is Wednesday's action. This is today. This is tonight. You're pulling back under the Bollinger Band. Support might be that 100-day average in green. You are overbought. When we look at the 10-year note, it's the same pattern. If I take off today's action, coming into Thursday, today, this is how you finished on Wednesday. You're up at the 100-day average in the upper Bollinger Band. The market got over all the numbers, pulls back at the end of the day under the Bollinger Band, and tonight a little bit further. There's nothing bearish here, but you're overbought in these markets, and you've had this big thrust from this unknown virus. In the March dollar index, you still have an embedded reading. It's still in the bull camp. So higher lows, higher highs. If the market can continue up, since it's over the 100-day average on breaks, that could be the support zone with resistance at the upper Bollinger Band. Even if you straight down went to 97.15, you don't get a bear trend. You'd end up with a higher high, lower low. So bulls are in control. In the eurocurrency, I want to take you coming into today. This is what the market looked like last night. Oversold, making a challenge, seeing if it can get down to that Bollinger Band. I don't know if it will or not. The news came out, the market had an outside day down, hits that number, and bouncing away from it. Not turning up, but still an oversold condition. You can't go by today's Bollinger numbers because the market just opened. So Thursday, both are under 20. The day before, but not the day before. My point is Friday's a real important day. Are you going to embed or get a big rally out of the market? So far, it's looking like it wants to embed. British pound tried the upside, fell back to the 18-day average. The trend is up. You've got higher lows, higher highs. Prices are over the 18-day average, so bias is up. The market fighting a battle to not get back under this low against the lower Bollinger Band, but the bulls have control going home. Japanese yen, did it get high enough to say, we're through that dilemma? Here's what bothers me. If we take a look coming in, this is Wednesday's action. Remember, I'm already into Friday. You had an embedded reading. You finished the day out, you kept the embedded reading. Losing it early on tonight doesn't mean a lot. It's too early. The objective was the 18-day average. If it's lost, you've already done that. It's not a pretty position. You really don't want to see the market get up and over that 91.77 and stay over it if you're going to be bearish. If it did that, how high could it go becomes the question. Other than that, is there a reason to be bearish? Well, the only reason would be the embedded reading staying in place. I don't know if it'll stay there or not. Bitcoin. When you lose an embedded reading, this is an embedded reading. This is the action on Wednesday. You drop it on Thursday. That's today. So tonight I'm looking to see, does it regain it? It's not. Now, I'm not saying it can't, but it's not. I think the bulls are bailing. I think they're looking to see what the market does against this 81.41 level, the 18-day average. Trend down, bias up, momentum down, and often when that momentum is lost, like it is right here, price and the 18-day average make an attempt to get at each other, and that's what I'm looking for. Momentum often leads price, remember that. In the Brent versus the WTI crude, what a rally this has been in that differential. I mean, if you think about it, we were $4.20 December, the very beginning of it. Here we are into the latter part of January, and you got up to 630s. You're at 634 now. Pretty dramatic in price. Where did we hold? I'm going to take you back to yesterday. This is Wednesday. We have a market that failed against the 18-day average, came down. I don't see a trend here. I see a higher high and a lower low, but you have the embedded reading. As long as that reading's in place, the bears are in control of the market. Lose it, and I'll look for the market to get a rally, go into the closest main moving average, which in this case, it's not the 100. That would be up here if you lose the bearish embedded reading. If the market comes down, the first objective is 62.60. You hit yesterday 62.53. So if it's going to continue, possibly, not has to, maybe the next support, which happens to be the 100-day average, might offer something. Today you drop down, you hit the 100-day average. You can see you're finding support between it and the Bollinger Band, and that's all that I could say about it. Still a bearish scenario. Bears are in control. Admittedly, you have fallen $10 a barrel in no time at all in the month of January. Maybe overdone, I don't know. WTI crude. WTI didn't even pay attention on Wednesday. in reality. It stopped right here with the embedded reading. Because there's no other major average under it, whatever it's going to do, it's still in that thralls of this, and you can see that all you're doing is bouncing back over the Bollinger Band. Resistance on this rally is 56.66, the 100-day average, and this is ruling the day. Forget the pattern. You don't have the bear pattern of lower highs, lower lows. This rules the day, the embedded reading. Gasoline market, is this enough of a washout where the market maybe gets a rally? And if it does, I'd look for 162.05 as resistance in the market. Energy's got hit from this virus. The question is there another wave of hit coming? We don't know. The World Health just told us what they told us today, and there's going to be more updates coming out of it. We certainly hope that it's contained into the China. That's where the passage is. In other places, we don't see human-to-human passage of the disease. Natural gas, you're very oversold. You got overextended under the Bollinger Band. You're just moving sideways. There's nothing bullish on this chart at this point. So I put it all together, and I think traders are doing this. They're scratching their head. What do I do with this market? Do I keep my hands in my pocket? Do I move in? I think the virus is going to get worse. Another side now, they'll find a way to contain it. Pretty confusing times. The stock market doesn't care. Literally doesn't care, just keeps moving higher. You know, we write about this, and I certainly write a lot about it, and I talk about it in my research, and Linn has research as well on this. And if you want to keep up with these markets from a futures perspective on options, if you're a grain trader, you're looking at what does this all mean for the U.S.-Chinese trade? Where are we on all this? Well, we offer it, and you can access our research through our charting software, or we can send it to you in emails. We cover all these different sectors, and of course, if you're signing up for this, you might want to trial to my research if you haven't had it before. I don't keep giving away free trials. You can afford it. It's not a problem, and there's a lot of research into it. For your free trial, give us a call. You can go to our website. You'll see the free trials on the bottom right. We have a research area where you can find out even more. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.